There's nothing more important in day trading than having a complete understanding of liquidity. So, this is the fourth episode in my Liquidity Bootcamp series where I talk about concepts that will help you understand the markets better and frame your trades in a much smarter way. So, today we're going to be talking about a concept that is my personal favorite in the entire market when it comes to liquidity. I just taught you guys about certain draws in liquidity, like relative equal highs, relative equal lows, equal highs, equal lows in the last episode. But today I'm going to be talking about imbalance highs and imbalance lows, IMBH, IMBL, and they basically act as a magnet and reversal point. Okay. And it's actually kind of ironic because IMBH, for whatever reason, ChatGPT told me stands for an intermediate mass black hole because they absolutely just suck everything in exactly like imbalance highs and imbalance lows do. So, to get my corny ass scientific explanation out of the way, imbalance highs and imbalance lows are basically just swing highs and swing lows that get put in inside of a fair value gap. Okay. So, here's what I mean. Notice how we have this 1 hour bearish fair value gap right here, right? It's a very obvious one. No one's going to deny it. That is a bearish fair value gap. And we come up and we put in this swing high inside of it, right? Now, a lot of times we are just going to reject, right? Because we have rebalanced there. But sometimes what you're going to see is that we'll actually come back up, take that swing high out, and then reject. Okay. And so the imbalance highs and imbalance lows become a very good draw on liquidity, right? Because you can see we're clearly resisting making a move lower and taking out this prior low, right? We're not getting any displacement below the body of this previous candle. So at this point, it can kind of be assumed that we're going to try to make a run and retest that high inside of the bearish gap because sometimes, for whatever reason, the market just wants to rebalance twice, right? Because that's essentially what we're doing here. We already rebalance here, but that rebalance for whatever reason, and it's kind of difficult to ever know exactly why, but you could just, right, you don't have to predict, just react. You see that we're not getting any displacement below these previous lows after this rebalance, right? So you have to assume if we rebalance into a fair value gap, you want to see an impulsive move out of it that creates another fair value gap, aka displacement. When you're not seeing that and you're seeing a complete refusal to actually follow through, oftentimes you're going to actually take out that imbalance high, right, in a bearish situation, or the reverse in a bullish situation, right? And so where that becomes important is recognizing lack of displacement after the initial rebalance can set you up really well to target that swing high inside of the gap. Not only that, but once you actually take that and you rebalance for the second time, that's where you can really expect to potentially see the final initial follow through that you were expecting the first time we rebalance. And you can see we come up, right? We tap into this gap, okay? Fail to displace, fail to make new lows. So we rebalance again, take out that swing high, and that's when we start getting that displacement. We start taking the lows, we start trading lower, okay? So the imbalance highs are very good as both a target and a reversal point, but they're important to understand in the context of why or how is it clear that we're going to actually retest it? Well, like I said, if we fail a rebalance and displacement, which we did here, we got the rebalance, failed the displacement, that's when you can infer that we're going to be able to now use this as a good target, okay? So we're going to look for some more examples of these just to kind of drive the point home. Real quick, if you're enjoying this video, make sure to like and sub so that Santa can gift you a fat, juicy payout, and also so you can catch the rest of this series and all the other videos I drop focused on helping you all become better at trading. Appreciate you all for watching. Enjoy the rest of the video. Merry Christmas. So here's an example bullish of an imbalance low, right? So bearish is imbalance highs, swing highs inside of a bear gap. Bullish is imbalance lows, swing lows inside of a bull gap. So we have this massive 4-hour bullish gap. We obviously rebalance to it, which is perfectly normal, right? Now, you would expect to create a displacement, strong move up out of this bullish gap now that we've already rebalanced, and you would want to see us take out the prior swing high. Well, you can see that we actually don't do that. Not only do we fail to displace, but we stall right below this high, which is not very bullish at all. So when you see something like that happen, you can kind of infer it looks like that we might want to rebalance, right? So we create another swing low. Now this is a relative equal low, right? So now we have two imbalanced lows up to this point inside of this bullish fair value gap, right? And if you play it, you can see, okay, what's happening? Well, we are failing to displace to the upside. You would really want to see us create an impulse leg higher here to confirm that this rebalance is done. But what happens? We set up relative equal lows inside of this bull gap, which makes me think that we're going to come down and run both, and then the actual displacement is going to happen. And I know this is hindsight, we're in replay mode, but I actually was able to use this logic to an extent to catch a decent long out of here in this 18.5K area back in April when all of this market mess was happening, right? Because this is from the tariff crash. This was kind of when we started to recover. But like I said, look what happens. We come down, we take out these relative equal internal lows, right, which are part of this higher time frame gap. And now, because we've done that and we've started to show strength off the bottom of this gap, so we're not inverting it, right? We're not displacing through the gap. That's when you can finally expect to get that move up, right? And we do. We finally get the move up. We create new highs. We start a new uptrend of sorts, right? We make a higher high. So that's kind of where this reversal was confirmed, right? We failed to break down below this gap. We then start to displace higher, okay? So hopefully you guys understand that point. Using these gaps and using the highs and lows inside of them, the imbalance highs and lows, has been the most game-changing thing in my entire trading, okay? Now, the reason I say that is because if you understand the concept of imbalance highs and lows and why they actually get taken, you'll be able to easily identify market conditions and identify when we fail to displace, or when we fail to make another leg lower, or when we fail to create another gap. And understanding those conditions and starting to be able to kind of eyeball that is very, very powerful. I mean, right here, we have another perfect example, right? We have a bearish fair value gap that we put in, and we end up testing it right here, right? So on this candle, we create a swing high, right? So in a lot of cases, you would expect we should not come and take that out. But look, we are not creating any type of downside movement. We're not displacing at all. We're actually creating more swing highs. So at this point, you've just got to wait until we show some signature of a displacement, which we don't, right? Because we try to here, we try to reject, we try to finish the rebalance, and look at this wick. This is telling me we're not quite ready to make that move down yet out of this gap to finally take out this previous swing low. Because if you guys watch the fair value gap section of this, you know that's how the market works, right? The only reason we're coming back to fair value gaps is because they're internal range liquidity. So the ultimate objective is to rebalance into them to then continue the trend, right? Which we do right here. So once you see this rebalance, your expectation is, okay, we're going to rebalance into this bear gap to push down to the prior low and beyond it, okay? Because this is a bearish gap example. Now, that's true, and that's a good way to think about it. But like I said, if you understand imbalance highs and lows and you understand lack of displacement in these concepts, you can actually use these as a target. So now, what do you see? Oh, we've completely failed to displace. So you want to see this high taken out now before you look to go short. And it happens, and boom, never close above the gap. Then we finally get the displacement. We end up melting down, okay? So I hope this video was helpful to you guys. I think the imbalance highs and lows, it's a concept I use a lot, and I even use it on the lower time frame. Like if this was like a 15-minute chart, I would look for my model to come out of this after sweeping out a high inside a bear gap, right? If I'm shorting, or the opposite. So you also have to understand the fundamental part of this, which you should already understand, is that fair value gaps in and of themselves are liquidity, right? They're internal range liquidity, so price is going to draw towards them. So when you set up like relative equal highs inside of them or obvious swing highs, that might be just because you rebalanced and you're going to continue the trend. But if you fail to displace, then you can use those swing highs set up inside of a gap, or swing lows set up inside of a gap, as your target, okay? And you need to get that through your head, because that's a really, really important dynamic, right? It's only when you see the initial rebalance fail to bring you displacement that you should use these as targets and reversal zones, okay? So that's it for this video. I appreciate you all for watching. If you are still watching this video, you're probably serious about trading, so make sure to like and subscribe. And also, make sure to join my free trading Discord, which is linked in my YouTube description. I have a lot of members in there, and starting in 2026, it's going to be a lot more active. I'm going to give market commentary every day. and it's still going to stay free. So I also make time to respond to everybody in there, that comes in asking me questions, giving me content ideas, whatever it is. I interact with everybody. I make time for you all. So I appreciate that. And like I said, I'll catch you guys in the next one. Peace.